Okay, good morning everyone. Welcome to JFD Brokers Traders Espresso with me, Darius Lanchauskas. Today's the 5th of June 2018. Yeah, welcome guys. So welcome to this Tuesday session. So before we jump into the charts, as always, let's quickly have a read through our risk disclaimer. So the content of this webinar does not constitute investment advice or investment recommendation and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. So also a quick reminder of our JFD Brokers research page, where you can go in and have a look at different analysis that we do on a daily basis. We throw out different trading shoutouts. We throw out analysis in different languages as well. So yeah guys, feel free to visit us, check us out, and I think you can find something useful for yourself here. But for now, let's have a look at the charts. The first one I want to start looking at is the S&P 500. Now, the S&P yesterday finally managed to close above this range that I was talking about. So it broke this range and broke it to the upside, broke above this 2742 mark that I had highlighted here, and we're now sitting here slightly above it. Certainly this is more of a bullish sign than a bearish, so that we could see another continuation to the upside. We could see a touch of this upper bound of the Bollinger Band, and that would be around the 2755 mark, and we could maybe even see a continuation to the upside here, maybe even touching this 2790 or even the 2800 levels. So for now guys, watch out for it, be very careful. Certainly if you're going to be long, then, well, I mean, have your stops prepared, of course. I mean, if we do get a reversal back inside into this range, well, the upside could be off the table for now again. So like I said, watch out for it, be very careful. We're not far from this 2742 mark still. We need to see another better push here to the upside. But like I said before, for now we are more bullish on this one than bearish. So we could, like I said, we could see a continuation to the upside. On the downside, again, like I've just mentioned as well, if we would see another move back into the zone here, between the 2742 and the 2700, well, stay sharp, because we could end up moving towards this lower side here, lower side of the range, towards the 2700. We could get a test of that, but that is only, of course, if we see a move back inside the range, and especially if we see a close on the day inside the range again. So for now guys, stay sharp, but like I said, keep an eye on these higher levels as well. Let's quickly have a look at the FTSE 100, and oh, there we go. So the FTSE yesterday managed to close in the green zone. The index managed to kind of make an attempt to touch the 7795 mark, approximately there, but still was just a few points shy, like, from touching it. So at the moment, of course, we're still bullish on this one. Well, let's say somewhat bullish. We're still aiming for this 77.95. If suddenly this reverses down to the downside, well, keep an eye on this level here, guys. This 76.90. A break below that could send this index a little bit lower here, maybe even test the last week's lows at around 76.10. So, and if that level doesn't hold, well, guess what? I mean, this is not going to be looking good for the FTSE 100, and we could end up moving lower. So, but for now, of course, let's not jump ahead of ourselves too much. So let's first see what it wants to do with this level, with the 77.95. This could act as a good level of resistance. taking into account that it was the high here that we had in January this year. So guys, I mean, like I said, this area could prove to be an important level, the 77.95. So watch out for this one. Let's see what he wants to do with it, and then we'll take it from there. But like I've mentioned before, keep an eye, if we suddenly get a reversal, keep an eye on this 76.90 level as the next potential area of support. And then, like I said, if we start breaking that level, well, we could end up pushing lower towards the last week's lows. Looking at the DAX, of course, yesterday closed in the red zone, and it closed below this. This level that I was talking about here, the 12,830. Certainly, of course, all eyes are on today. We can see the DAX is stuck in this little range here between the 12,830 and the 12,600. So until it kind of gives us a clear break and a clear close above, either above this range or below it, then we'll probably take it from there. I mean, we'll probably, this is where DAX is going to become interesting for us again. But for now, we're just observing this one and not really, let's say, getting into it too much. So let's quickly have a look at gold. Well, gold is, well, yesterday in my trader's espresso, I was talking about this one. It was forming a bearish candle, and I was talking about to keep an eye on this upwards moving trend line here. This trend line is running since December 2016. So yesterday we were just bouncing around it. Then during my trader's tea time, we saw the gold. We saw gold pushing higher, testing this downwards moving trend line. And certainly it didn't break, it didn't close above it or anything like that. It stayed within this little area here, but still managed to close the day in the red. So now, of course, this is more of a bearish signal than a bullish. So we can see that gold is trying to break this trend line again, this long-term upwards moving trend line. Certainly it's probably going to get, well, start testing the 1290 area, and let's see what it wants to do with it, because if we'll start breaking it, then there is some potential for this commodity to go lower here, towards this area, this next area of support at around 1282.5, so approximately there. So keep an eye on it, guys. I mean, good level to watch, because that was the low that we had on the 21st of May. So for now, guys, watch carefully. I mean, this is still too early to say that this is gonna now just continue dropping, and and we're gonna see like a slide down here, because to be honest, this is gold that we're talking about. Any new political news could trigger it, and we could maybe see a strong reversal back to the upside. So for now, keep an eye on it, keep observing it. Let's see what it wants to do, especially with this level 1290. Looking at the euro dollar yesterday closed in the green. We almost managed to touch this area that I was talking about, the 117,500. Excuse me, the 117,500, and we were just shy of a few pips from that level. Certainly right now, it's, even though yesterday we closed in the green, still, to be honest, this is looking quite tricky. For us to become more bullish on this one, we need to see a nice push above the 117,500, and especially a close above the 117,500 in order to consider higher levels. And slightly above that, we do have the important level of resistance here at around 118,250. And of course, if this pair continues to push higher, continues to break these levels here, well, keep an eye on not only on the upper bound of the Bollinger Band, but also the psychological 120 level that could act as a good strong level of resistance for this pair. Also, we can see that we do have the 200 EMA as well, not far from that level. So this all kind of leads to the significance of this area here, the 120. So but before we kind of start considering even the 120, we first, of course, we need to see a nice break above the 117,500 and then eventually a break above the 118,250. So but if suddenly this reverses back to the downside, keep an eye on the 116,500, guys. A break below that could send this pair lower slightly to test this downwards moving resistance line that it broke out recently from. So we could test it from above. We could maybe bounce off of it again and then move higher. But if this continues to sell, we could end up testing this better, slightly more important trend line here, the upwards moving trend line that started around the let me just remind that so around January 2017. So good strong area of support, especially this area here. So but for that we would need to see a nice break below the 116,500. Let's quickly touch on GBP USD and GBP USD. Similar story, certainly. Well, similar story. It's a similar story as I wanted to say as the euro dollar, but to be honest, not quite. So we can see that the pound is kind of weaker against the dollar than the euro against the dollar. So we closed yesterday in the red. Certainly, it's kind of we should stay very cautious on this one, to be honest, guys, because we are not, even though it closed in the red, still there is some potential for this one to move higher again. We did break this downwards moving resistance line. This has been running since mid-April this year, so for quite a while now, and we've broken it to the upside. So if we get another push here towards the 133 mark, 133,900, if we do get another push here towards this area, we could start testing it, we could start breaking it, and if we do get a nice break above the 133,900, it will break the 134 as well, and we could start moving above this 21 EMA shown here as the yellow line, and we could end up moving here higher towards the 134.55. But if that doesn't hold, well, it opens the path towards higher levels. For now, we're staying very cautious. We need to see a nice break here above the 133.900 in order to consider further upside moves. On the downside, we're probably going to be more bearish if we see another attempt of this 132.05 mark, approximately there. If we do get a nice break here, then we're probably going to aim for lower levels, and a good lower level here that we're watching is the 130.55, approximately there. Okay, let's touch on a few dollar pairs where the dollar is the base. So the USD JPY, certainly we can see that it's testing the psychological 110 right now. Today, I would probably should say, so testing this level, and of course, for us to kind of become more bullish on this one, we need to see a nice break here, not only above the psychological 110, but also above this 200 EMA, shown here as the black line, and then we'll probably go for higher levels, maybe even a touch of this this lower side of the range that the pair was stuck in here for a while. So we could end up testing that lower side, if we see a nice move above the 110 and the 200 EMA. And let's touch on another one quickly. I do apologize for the external noises if you hear anything, guys, but so having a bit of renovations here. But anyway, so there we go. So the USD CAD. So USD CAD is currently balancing around this downwards moving trend line here, or we could say also the upper side of the triangle. So currently, at the moment, of course, we're keeping a close eye on it because it's very tight trading here, and if we do get a nice push here away from this upper side of the triangle that it was broken out of, then we could maybe end up moving towards the psychological 130 again. A break above that could send this pair a little bit higher towards the 130.500. If the 130.500 is not able to withhold, well, guess what? It opens the path towards these higher levels that we had. So For now, guys, just keep a careful eye on it. If we roll over here and we move lower, well, the next potential area of support could be this low that we had in we had last week, and that's around 128, 180, approximately there. So good level of support here. A break below that could send this pair towards this lower side of the triangle formation. Okay, I'll have to wrap it up here, guys. I hope you found this useful. As always, if you want to join me later on today at my Traders Tea Time at 13:15 GMT time, 14:15 British Summer Time. But for now, guys, thank you very much. Thank you for listening and watching, and have a nice day. Bye-bye.